Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien, Steve Rhodes. We appreciate you growling and prowling out here with us. Hope everyone's having a great day, safe day. Right now, we get the Dow Industrials down 132, Nasdaq's off 35, S&Ps are down 18. And, this morning, folks, we get a great guest to kick off the morning for you as everyone's driving across this great country. We have Briggs. Graham is the Chief Executive Officer of Harmony Gold. Harmony Gold, folks, produced 1.3 million ounces. That's with a big M, folks. Million ounces of gold last year. You can come over to our website at tfnn.com, and you're going to see, if you're watching Tiger TV or if you do the archive later, you're going to see we have a presentation up, and we're talking about creating a sustainable company, generating earnings that fund dividends and growth with free cash flow. Graham Briggs, welcome back to TFNN.
Hi, Tom. Great to hear your voice again.
You too. I'll tell you, 1.3 million ounces of gold is absolutely amazing. What is just as amazing, though, is that we have the Rand trading at 8.4.
Yeah, that's, of course, good news for us, Tom. It doesn't necessarily respond in the share price, but, of course, the Rand weakening like that means that we get more Rands for our gold, and our gold we sell in dollars. So
yes.
It's good news for us here in Harmony in South Africa.
Yes, I was just saying to my talk host partner, Steve Rhodes here, Graham, that I says, this is a real sleeper. He had asked me, right before getting on, he says, well, how does the chart look? I says, man, it looks, see, to me it looks dynamite, because I understand, how it came down, but I really, the correlation, the true value is absolutely amazing. Well, let's walk through it, because you got it inside this presentation. So tell us what's happening with Harmony now.
Well, Tom, I think, we've gone through lots of restructuring over the last few years. We're now in a state where we've really, we bottomed out at sort of 1.3, but closing some of our lower grade operations, focusing on the higher grades.
Yes.
And so we are growing from here forwards in South Africa. We've basically had several projects, and they're coming online. They actually, in this coming year, will certainly produce free cash flow after all their capital expenditure. So that's good. Before this, they've been in the capital expenditure phase. And then we've got this great project in Papua New Guinea.
Yes.
Here in South Africa, we produce most of our gold. 92% or so of our gold is produced here in South Africa. And, of course, fully exposed to that rand exchange rate that you're talking about. So that's all good news. And then on top of it, of course, there's all the woes in the world on the financial markets. And as you know, resource shares have taken a big knock lately.
Yes.
It looks like they've all bottomed out and are heading upwards again. So that's all good news.
Well, what's intriguing, and this is, I think, over the course of the last, 10 to 12 years, I remember flat out, in 2001, Harmony paying big dividends, okay? And, let's say whether we take the Canadian gold equities, I think what people, you certainly saw it because you were always cognizant of the Rand dollar and how important it was. But what happened across the world is that people just didn't realize that, oh my God, the Canadian dollar would get so high, the Australian dollar would get so high that their expenses would go up more so than the price of gold. So it's kind of interesting what has actually happened. And of course, now the dollar's U.S. dollar's going up, the Rand dollar is getting weaker, which is just, a cash flow positive, extraordinary inside, South Africa in general and Harmony in general.
Yeah, Tom, when you're in an environment where your currency is stronger than the dollar, of course the dollar being the ultimate, the value which everyone measures gold price in.
Yes.
Of course, when your exchange rate is stronger, then you suffer. When it's weaker, then you have all the benefits, and we've got the benefits right now, as you rightly point out. Australia and Canada and the like are probably on a par with the US dollar, and therefore they have got a bit of headwind.
When I'm looking at the presentation here, the earnings spike that you've had December, of 11 in March of 2012. That's pretty dramatic, isn't it?
Yeah, Tom, we've really been turning the company around. So it's good to have the company being turned around, as well as a little bit of wins from behind as for the exchange rates and the dollar price. Of course, it's still good. It's not as good as it has been in the last year or so, but it's still at a very good price in rands per kilogram terms.
Now, let's talk a little bit about, we got Papua New Guinea. Now, this Papua New Guinea, I mean, this is an incredible find.
Yeah, it certainly is, Tom. As your listeners will know, this is a copper-gold porphyry. It's one of the big ones of the world. It's, of course, what really makes it quite fantastic is the high grade. So it's got good copper grades and good gold grades. And we are in a joint venture with Newcrest Mining. That's an Australian company. And we are in pre-feasibility at the moment. We finished that at the end of June. We'll hopefully have the results of that pre-feasibility out by the end of, probably in August sometime. And then people will be able to see sort of how magnificent it is and what sort of mining scenarios we'll have.
Yes. Now, after a pre-feasibility study, what is the next level after that, Graham?
Yeah, Tom, the pre-feasibility is like the very initial study where you can see if it's economically viable to mine the deposits.
Okay.
Then we go into what we call a bankable feasibility. That has got enough confidence so that if a project were to be looking to borrow money from a bank,
yes,
they could borrow money on it, and that's why it's called a bankable feasibility. And then soon after that, you go into construction and you start building the mine. This mine is going to be a big mine, underground block cave, so it will take quite a bit of effort to get it going and construct it. And we are certainly at the moment hoping that we'll get early production towards the end of 2017 or early 2018. Somewhere in that ballpark, we'll have early production from this mine.
If I can change gears on you for a second, I saw, I mean, it's been a long time now, but like about 5 years ago, there was problems in South Africa with the electricity, and I saw that you are basically starting a project, a solar project, right?
Yeah, Tom, we do, electricity has been quite tight on supply here in South Africa since 2008. And so besides saving and doing all the good things with technology, obviously looking at alternates. And although alternates won't ever supply our full energy needs, where we've got abilities, and of course, as you know, South Africa is known for its good sunshine, great weather.
Yes.
And therefore, we've got some land, and that's the obvious choice to really look at that sort of project and see how viable it would be.
Can you just explain once again that when you're selling gold in U.S. dollars, right, and all your expenses are in rand, so if you can just explain that to the audience just a little, because that part there is exponential, it seems.
Yeah. Yes, Tom, for sure. So our costs here in South Africa are mainly in rand.
Yes.
And that is salaries, electricity and the like is all in rand.
And folks, they got 300,000 employees.
Yeah, we've got 40,000 people working for us here in South Africa. That's employees as well as contractors. And so most of our costs, probably 80% of our costs are in rands, denomination, local currency.
Yes.
And therefore they don't vary with the dollar. Now, we sell our gold in dollars. So if the conversion rate of dollars into rands is better, in other words, our currency is weaker, we get more revenue. And so we get better revenue if our rand is weaker for the same gold price.
Amazing. Graham, thank you so much. You have a great one. You have a safe one.
Thank you very much, Tom. Speak to you again sometime.
Absolutely. We're going to be right back, folks.